All right, guys, SPX, man. S&P 500, time to relook at it. Time to see if the parameters have changed since my last podcast on the SPX. I think back in late November. Is the premise different? Is it time to say that it's back into a stage 3? So what we're going to do, we're going to recap, go around, try to do a weight of evidence and see what is actually happening now to the price action. So let's zoom in before we do some stage analysis on the weekly. All right, the high is still the high all the way here. So this crazy candle here with the high at 29.39 and this one 29.40. But we were going to measure on the, well, it actually gapped up right here. So on that open, that's going to be my resistance. Until we close above that, there's no way I could be playing a breakout very hard. Right now, I had my monthly defined breakdown line at close, open at 26.30 about. Is that where I have it here? Yeah, about 26.30. We had a confirmed close below that in December. That gives me my measured move, which the target was actually reached in that same target, in that same month, if I'm not mistaken. Was it? Almost. Downtrend, 12-month moving average actually has been going down since volume 23. So right now we're going up. In November the volume was going the moving average up, and now in December we actually had a moving average going down for the first time in a long time. I think from June here we had it was the last time 30 right here, April 2016, no, right here, May 2016. That was the last time that we had a declining moving average declining, price action below the moving average. If I'd be able to do if I do stage analysis on the monthly candle chart, I would say this is in a stage 4, guys. Close below important resistance support line, declining moving average. Is it the best entry here? Probably not. As Stan says, you have some pullbacks. And this is what you could imagine as the price action is far away from the 12-month average. You could have a pullback to that breakdown line at 26.30. That's the pullback. And after that, when price action starts going back down, this be a good place to short right here. What happens if the price action closes above that breakdown line? Well, it's not a good sign if you come back above it. If you close above that line, you're still below the 12-month moving average. But you're going back into that top pattern, to that sideways move. You're not going to go long until the price action is above the 12-month average, until it's inclining, until you're above important resistance. But you definitely want to rethink about that short. So right now, it's closing in on this previous support and resistance, and the way it reacts here is going to tell us how it's going to continue. Right now, the trend is going downwards. The pressure is downwards. We're going to zoom in on the weekly. We're going to check out the health of that pullback. Is it a reversal? Does it look like a reversal? Is it a hitting weekly defined resistance? Is it going to pull back at a lower level? We're going to check that out. But right now, on the higher trend, it's still a downwards trend because of the declining 12-month moving average, because you're below that monthly defined breakdown line. So that's it, guys. Until you close above 26.30, monthly defined closed, still in a downtrend, and we should consider this pullback as a simple pullback for now. Okay. Not going to compare it against SPX because it is the SPX. Okay, I'm going to remove these monthly defined scribbles. because now we're going to look at the weekly. All right, where we're at. Okay, this is my monthly defined measure moves. Don't need that anymore. But I'm going to keep the monthly defined support line, now turn resistance. Because remember, if I give you the weekly chart and I would tell you 2630 was an important breakdown line or now resistance. You say, what, Pat? I don't see it. I don't get it. I don't see. I'm on the weekly. Well, time frame is everything. So right now on the weekly, oh man, close here. It's hard to tell. Okay, the monthly defined breakdown line coincides also with this pattern here. Close with this weekly defined sideways move under the 3-week average, creating that pressure, downwards action below it. But I'm trying to look at here. I have. So what I do, again, you go in an uptrend. Then after that, you say, well, where's my support if I go down? Then you go down until you hit red candles. And the more the red candles are, the more that means those closes have been brought up. The market's telling you that close is important for that weekly close. The market says, I'm not gonna. I don't want the price action to close below that. So right now, at that moment in time, that's where the market thinks the price should be. The more you test it, like you can see right here, the more that is important defined weekly support. See, go up here and right here. And often if you extend it to some degree, to some area, here you had a sideways move close to the 3-week average, then you had a breakout. Well, that zone here, that 24.05 breakout, then you pull back and then it gets tested. So now tested a little higher at 24.21, 24.22, closed above, whoa, try to get away, closed above, started there. So now that you could expect some support on the weekly candle chart. And right here we see it. It barely closed below it. It gapped down, but the price action closed above. And then after that, the price action is going above a little bit more. There's even here this weekly defined previous resistance turn support. We sunk through these two. And now that MADAC as support again. If the price action is here and trying to go down, price action actually came back up. I think if we go on the daily, we'll actually see that. Okay, here's my lower line. Price action came up on the daily, was dipped below, and hey, I'm hitting some weekly defined support, guys. Close it back up. And you could do that until the smallest of time frames. But remember, the bigger time frame, the more weight these lines have, more weight, more importance, less whipsaws. All right, so now the price action went back down. Price action right now, we're in between these two zones. Here's my weekly defined support, now turn resistance, and here's my monthly at the 2630. So if this is the first line of defense, price action could stall if you at the 25.78, 25.80 level, maybe just a little, higher here. Okay, we'll keep it there. Here, price action could come here and stall at this level and then go back down. It could sink through or pierce through, and after that, in the same motion, in the same week, hit that monthly defined support, maybe go up a little bit, little wick, and then go down. So these are two key areas. This zone right here, weekly defined support, which might stop that pullback in its tracks there. And if the upward movement is strong enough, you might touch all the way here, this monthly defined breakdown line. What's happening? Let's look at the volume. Let's get some weight of evidence. Well, remember, we had this red volume here, this big, that ninja knife slowing down the action, giving a market say something's wrong, and now I need it all this week, so it took forever. this February, a few months, 6 months to even get back, beat that high, and we barely did it for a few more weeks, and after that came back down. Increasing red volume, and here this one hurt again. So you can't neglect that. A lot of selling pressure on that one. After this consolidation, this breakdown move out of the cloud just fell, free fall until it hit that weekly defined support here, until it sank through that weekly defined previous resistance, now turned support. And now the price action is just bouncing off these levels, coming back up. The volume is not exceptional right here for this week. So the rally right now, if I would have seen increasing green volume right here, I'd say, that could be that's not a sign you want to pull back. So right now, as soon as the price action starts reverting, so hitting these levels, and then after that you get a red candle, and the price action starts going back down towards previous lows, and if the volume, those green days, stays in those levels or even goes down, this would be a good opportunity to enter short. You're right below that Ichimoku cloud. The 3-week average is going to have time to catch up a little bit, but you can't close above this line here. If you close above the 2630 on the monthly chart, you don't want to be there anymore. You're going more in a sideways move. You're still far off. It's not the best of scenarios, but remember, Stan, where your sell stop would be on the weekly would be up here. If you'd be the trader's way, I'm going to sking that, the trader's way, the investor's way, your sell stop would be at the bottom of the pattern. So if I would flip this, for those used to looking at Pat, okay. Where are my scribbles? Didn't keep my scribbles. Okay, seriously. So you have a top formation. This would be the worst case of your sell stop right here. If ever you overcome that high, you're out. But this is a better one, the trader's way, right under 30-week average. That should protect you right above the high of that pattern right here. Could be just a little higher of this sideways move we had for a few weeks until it broke down. So if you enter here, your sell stop's going to be all the way up here. Give it time to wiggle. And I guess that's all it is, guys, for SPX. Still in the stage 4 decline, pulling back on contracting volume, 3-week average declining, price action below 3-week average. You're far away from your sell stops. So this is a classic stage 4 continuation short. If ever it pulls back here, you get a chance to short here. That'd be the best opportunities. And with that price action going back down, you're confirming more and more lower highs, lower highs, lower highs. And after that, you're going to make a run to see if you're going to make lower lows with that next run down, guys. All right? KSPX, pullback in progress. Ciao, guys.